There's simply no good way for me to tell you this, but the truth is, a liquidity crisis is coming. And the liquidity crisis will absolutely break down values across all markets. And just to be clear, so we're all on the same page, when I reference liquidity, I'm not talking about a rainstorm, I'm not talking about a hurricane, I'm not talking about a tropical storm, I'm not talking about a monsoon. I'm talking about regular people's ability to access their cash and their assets. And just to ensure that I don't lose anybody and that we're all on the same page, Oxford Dictionary defines liquidity as the availability of liquid assets to a market or company. And then in parentheses, it says, the banks closed, causing serious liquidity problems for smaller companies. And I'll very likely pop this in so that you can see it, but I'm referencing liquid assets, cash. And underneath that bullet point, Oxford Dictionary goes on to say a firm may be unable to pay unless it has spare liquidity. And another way to define liquidity is high volume of activity in a market. And I'll make it completely idiot-proof. It's how fast you can get your hands on your cash. Because during a liquidity crisis, the availability to access your cash is not fast. And while I know that almost everyone who purchased a home in the state of Florida and pretty much everywhere else in the country has experienced significant gains as it relates to the equity that they think they have in their house. And I suspect there are a lot of folks out there that think that the equity in their home is liquid. I'm here to tell you it's not. And during the great financial crisis, when the stock market got eviscerated and people were panicked, people ran to the bank to pull their money so they knew it was safe. And just like Silicon Valley Bank and all the other banks that had bank runs here in the recent past, if your local bank experiences a significant uptick of withdrawals from their deposit base, said differently, from their customers, from people just like you and me, if those withdrawals exceed what they have in terms of cash on hand that day, the bank will have a liquidity crisis because the banks are not in the business of keeping deposits on hand. They invest them, seeking a higher rate of return. And while they certainly have some cash on hand, they definitely don't have enough to cover when panic hits. And when the markets fail and the economy fails, but when a bad economic thing happens and a bad market event happens, people panic. And the first place they run to is the bank. And yes, it defies logic. And no, it's not the best decision. But when people are panicked, they don't make rational decisions. They do what they think is best for them in an emergency. And a lot of folks are going to think that it's an emergency. Just like my clients who were terrified when SVB went under because they had to wire their funds for their new home. And thankfully they were covered and the property closed cleanly and there were no issues. But they were terrified because the deposit base was withdrawing cash so fast that the federal government had to step in. But the market was terrified and the deposit base demanded their money instantly, and there was a run on SVB. And I'm certainly not hoping or praying for a bank run. That's the last thing I want. But I know it's bound to happen. And it only takes one bank failure to set off an epidemic of fear, terror, and panic. And while I've shared a lot about this in the past, and I did a video a year ago talking about the liquidity crisis that will destroy the housing market, everything I said in that video has come to pass over the last year. And I don't say that to pat myself on the back. I say it because it was obvious, and it's only going to get worse. Which, to be clear, does not mean you're going to be forced to sell your house if the market tanks. But it does mean if you can't afford to make your mortgage payment, and you can't afford to make your car payment, and you can't afford to make your credit card payment, and you can't afford groceries, or gas, or whatever it is to live your life, you will be forced to sell assets. And if you don't have any, you're in big trouble. And if you've got plenty of them, well, chances are you're not. But as of today, and for a long time, Ray Dalio is out there telling everyone that the US is going to have a debt crisis. If only there was a YouTuber talking about this exact same thing. Oh wait, there is. I've been talking about it for years. And now I'm just reading this, but billionaire investor Ray Dalio is watching closely the risky US financial situation. And in case you haven't been paying attention, the US government is ready to shut down. And many folks who are on Social Security are afraid they're not going to get their checks. Well, nothing to be afraid of. Those checks will still go out. Unfortunately, I don't know that the Treasury has the liquidity to continue to fund them in the future. And I'm not alone. Ray Dalio has been talking about the same thing for a long time. And he's written many books about it. You should check them out. But he goes on to say we're going to have a debt crisis in this country. And if you don't know who Ray Dalio is, please Google him because he's one of the most successful investors in the history of the world. And he's the founder of hedge fund Bridgewater Associates, which has made enormous fortunes by correctly analyzing and trading around volatility in the markets and in the global economies. He goes on to say that how fast it transpires, he thinks, is going to be a function of that supply-demand issue. So he's watching it very closely. But the US debt levels have surpassed $33 trillion for the first time this month. And lawmakers are scrambling to negotiate a US spending bill before the October 1st deadline. But a failure to come to an agreement could mean a government shutdown and raise the perceived risk of the United States debt. Debt eats equity, and debt is no bueno. And if other countries do not trust the United States debt, it's no bueno for anybody. But U.S. debt levels have ballooned in recent years, especially after a roughly 50% increase in spending between the fiscal years of 2019 and 2021, according to the Treasury Department. According to the Treasury Department, which tells me those numbers are much worse. And while Ray Dalio is concerned there are more headwinds for the economy than just high debt levels, saying growth could fall to zero, give or take 1 or 2%, he thinks there's going to be meaningful slowing of the economy, which shouldn't come as a surprise to anybody because it's obvious. And while I'm a long-term bull on the United States, it would be asinine not to know that there is going to be volatility in the markets. And if you experience a personal financial liquidity crisis, you will be forced to sell assets. But right now in my housing market, there is a short supply of homes available. And right now in my market, there are still ready, willing, and able buyers prepared to buy homes. And I've read some of your comments, especially some of the real estate professionals that are in the market, and it's factually true. There are lots of real estate professionals right now that are doing better than they ever have. And it's also factually true that half of the licensed professionals that are in the market right now won't be in business next year. But when the market tanks, the true professionals are going to end up doing significantly more business because the market is always good for someone and the cream rises to the top. So while there will likely be far less closings that happen in the future, there will also be far less competition in the real estate space. The professionals are going to capture far more market share than they ever have. And the pretenders will be in a new job next year. And those who don't know how to pivot and shift, they're not going to be in the industry for much longer. And in a volatile market, you want a pro that knows how to navigate the right way to ensure you get what you want. And if we can ever serve or support you at the highest level, please reach out because we would love to help. Now, I hope you found this content valuable. If you did, please subscribe, leave a comment down below, and check out my next video because I suspect you will love it a lot. And until next time, peace!